Okay, good afternoon, everybody. Thank you very much for giving me your time and attention for the next 20 minutes. I'm sure as the last session of the day, thoughts are turning to the awards or possibly the football in the short term. So I'm only going to keep you for 20 minutes. We've obviously heard so much today about whether there's a crisis or whether there isn't a crisis, and everyone has got kind of an opinion and speculation on how that's going to kind of turn out over the next few months and over the next year. But what I wanted to do was to kind of share some really current statistics with you, so they're all in one place, if it would be useful, and then just kind of go through some real basic things that we could all be doing just to kind of make sure that we're protecting ourselves of the risks that are coming. So first of all, sadly, there's about 7.8 million people in the UK at the moment that are already struggling to keep up with their bills, and 55% of us are going to be worse off following the autumn statement that has come out earlier this month. And if we look at increase in spend over the last just year, we can see everything has gone up. We always feel it if we go into Tesco, it feels more expensive, but actually if we look at housing and energy, it's particularly high. In terms of what people are feeling. And we've started to see companies go in to insolvency, and that's on the increase. And brands at every level, whether they are Amazon and Twitter, or Wilko or Jules, there is impacts and there is redundancies or businesses going into administration. And these are tenants that we would have all referenced in recent times that work for these companies where we wouldn't have been able to predict it. In terms of the impact on the lettings market, we've seen rents go up about 18% in the last 2 years. So rents are now just over £1,200, but income not at the same rate. That's what's causing a bit of strain. According to Shelter last month, there is now 2.5 million renters in the UK that are either behind on their rent or struggling to pay. And that's a number that's at 45% since April, so that's a fairly scary statistic. I should have said all of these statistics are not from us. I've put the sources on there so you can see kind of where they're coming from. The average cost now to evict a tenant in rent arrears is about £15,000. And in terms of possession times, if you look on the government website, they changed it this week to now state that it is averaging 14 months in the UK. I struggle to believe that a little bit because we are in the process of evicting tenants, etc. So I've also included our legal partners' average statistics and also where we have rent guarantee in place and we're working with the insurers. Either way, they're all going up. They're all going up. So whether you take the 14 months or the 5.5, it's more than it was before. And this kind of really brought it home to me in the fact that historically, I don't know if anyone's heard of this, but the rule of thumb used to be that to be a landlord, you really needed to have 3 months' rent in the bank at any time if there was a problem and your tenant fell into hardship or you needed to gain possession of the property. I think that's changed hugely now in the fact that even if we take the worst case scenario of 5.5 months and we look at the average rent, a landlord would need to have close to 7,000 in the bank just to support that one property. If they're a portfolio landlord, that's quite a scary prospect. So when we turn to the tenants market, we heard today, I think Rightmove have released some statistics today where there's 36 tenants to a property. That's scary if you are a tenant looking for a property. But we can see that the average amount of applicants being registered across each branch in the UK is rising. 69% of tenants in London have said that actually they're delayed buying a home because of the increase in rent that they've seen over recent times. And more importantly, 27% of the people that were surveyed are looking to downsize at some point in the coming future because they can't necessarily keep up with the rental payments. And across agencies, 68% of branches, according to Property Mark, have reported rent prices increasing last month. So it's only heading in one direction. And the top most searched term in August, which when we've got the last statistics, was bills included, when obviously people are looking to see how rent and they can kind of control their costs. So it's quite scary. We've also seen an increase in young professionals looking to cohabiting, co-living situations to try and keep their costs. But these are the slides that kind of really brought it home to me when we actually look. If we take an average family back in 2020 and we look at their monthly income and we look at where their spend is, and we can kind of know where the spend has gone up. Back then, a family had a disposable income of just short of £700. If we fast forward to today, that has reduced down to just over 400. And the disposable income is a little bit of a funny anomaly because actually that pays for childcare and other things that actually are the good things in life. So actually it's not always classed as totally disposable. Based on that scenario, if a tenant falls into hardship, or any of us fall into hardship, it's harder to recover, and you don't necessarily have the means to remedy a situation as it occurs. So if we look forward to a tenant's future, unfortunately, it doesn't look the prettiest of pictures. They have an increased rent, they're in a very competitive market, the running costs of that property are higher. Their financial position is they are likely to go into higher personal debt. We're all expected that's to happen. They have reduced disposable income, and they've still got the autumn statement impact yet to come in terms of where they are. And unfortunately, in terms of circumstance, I learnt about the 3Ds today, but also redundancies and mental health impact and increase in spend just to stand still is all likely to unfortunately ring true. But also their knowledge is getting better, they understand their rights. If they contact citizens' advice, they're being told to stay put because there is no social housing to move them into. We are obviously trying to look at increase the standard of homes, but they're also becoming a lot more financially aware. And I've been in referencing a business for 17 years, and it used to always be the rent that got paid first because actually it was the thing that they needed. They needed to keep a roof over their head. That's starting to change, we're definitely starting to see it, and one of the reasons for that is there's no comeback. If you fall into rent arrears, and even if you go to court and you get evicted, you don't have a CCJ against your name. Actually, there's no necessary trace of that. But if you fall into debt on your credit card, you absolutely will. And so if tenants are trying to get to the next property or get on the housing ladder at some point, they're becoming very aware of what to pay and what not to pay, and rent isn't necessarily now the top thing. In terms of a landlord and what that actually means is obviously we've still got the rent reform impact yet to come, and we obviously don't know totally what that's going to be. Tenants are definitely going to gain more power that takes away power from landlords, so they're going to feel a little bit more helpless. There's going to be increased legislation. There's definitely higher mortgage rates. I went to the landlord investment show earlier this month. I've never been to a landlord show before, but I wanted to go and understand how landlords are feeling to be able to help our agents. It was really overwhelming when they were asked who's worried about the increase in mortgage rates and who is it going to impact. The swell of hands in the room was huge in terms of landlords already feeling the increased cost, many of them on interest-only mortgages, so they're very much feeling it. They have a greater risk of rent arrears, unfortunately, based on everything that we've seen with the tenant. They have an increase in repair costs. And in terms of what's going to happen with accidental landlords, I think everyone has an opinion, whether they're going to go, whether they're going to stay. I actually think there's going to be a bit of churn. I think some will go, and I think there's going to be some new ones that enter based on the fact that they're not necessarily going to want to sell their house when it's at a low point, when it's going to drop in value, and there may be some new ones coming into the market. So as agents, we can really help educate them and help them as they become new landlords. And in terms of taking all of that into account, what I wanted to do today was just kind of pull some tips and techniques and kind of back to basic points, I suppose, together in one place. There's probably many of these things some of you are already doing, but it's just a reminder, if nothing else, of the things that probably really matter at this point in time. And because the UK economy is changing, it's really important that we do change as well. If we stick doing the same thing, we're not going to end up in a good place. So if we take referencing, first of all, it's really important that you get high quality and accurate decision data. I don't know who your providers are, but you need to check. What do you get? How are they checking? What's going on? And how are you making sure the tenant is who they say they are, and we're checking everything? Go back and check at your business's affordability parameters. Across the industry, we typically work to a 40% rule, which means you take your income, and if the rent is falling below 40% of that income threshold, the tenant is okay. But actually, based on now that we know disposable income is down, that 40% might still be too high. And actually, you can lower it, and you can have a bespoke affordability based on what you want for your business. In terms of training your team to ask tenants some key questions, is always sensible to do so. So ask them up front if they can have a guarantor. Are they going to consent to open banking so you can see more information? And what is their financial backup plan if things go wrong? There is absolutely no harm in asking, especially if genuinely in your town you have 36 people wanting that house. Okay, you have the pick right now and your landlord does. So use up-to-date technologies. They do work, they save time, they are cost-effective, and they are accurate. And a good balance of between human and tech is definitely the way forward. I'll talk about that in a second. When, as a referencing company, we reference a tenant, we only know what information is presented to us. But what you've done is you've potentially been out on a viewing, you've spoken to them, they've given you their story. Correlate it back when you've got the information to make sure it tallies and make sure it adds up. Because that is a really good indication of fraud or someone just changing their story a little bit to be more attractive to you. Ask your tenant referencing provider, will they give you a fraud guarantee? So if people get through the net, they're usually the ones that cause you the most reputational damage and usually the most pain with the landlord. Ask if they'll guarantee that if they let somebody through, what are they going to do about it to help you? Give yourself a little bit of protection to allow you to sell something to your landlord. Talk to your tenant about their financial backup plan. So do they get sickness cover if they're ill from work? Do they have income protection insurance? Do they have any form of insurance at all? Will mum and dad help them? What is their scenario? With open banking, when we reference a tenant, we can access any of their bank accounts. So if they have a savings account and they're telling you they've got a savings account, ask them to provide details of that bank account as well, and we will check it and make sure that isn't in serious decline in terms of that they're needing to top up their standard earnings just to stand still. Talk about more guarantors, secure more guarantors. If a tenant has a guarantor, they're less likely to cause you pain. It doesn't cost you much to reference a guarantor, probably on average a tenner, and it makes a massive difference, especially when we get to mediation. Okay, if a guarantor is involved when we get to mediation, we're way more likely to get some form of a way forward, even if that means surrender of tenancy, which although might not be the absolute ideal situation, it's better than the tenant sitting put for many, many months. Think again about affordability. Your guarantors have rising costs as well, so look at their situation, and you might have a slightly different affordability limit for your guarantors, where they may have their own rent or mortgage payments than that of your tenant. In terms of your tenant's profile, what I realised in recent times is that on your CRM systems, you have so much information about your landlords, you have so much information about your properties, you don't actually know a lot about the tenant, because actually the tenant enters all of their information on the referencing company's system. Your referencing company should be able to give you all of the demographic profile data of your tenants. Who are they? Where are they? How much are they earning? What is the affordability limit? Have they been a tenant before? Do they have children? Do they have pets? That's really useful for you when marketing, actually, because if you know the types of tenant that you're attracting to your agency, you can target some of your marketing really easily, and that's really useful. Look at the industry split. So when you have a tenant, you know your local area. If you know there are businesses in trouble, if you know that there are industries that are very seasonal, have a look at it and understand what that tenant's presenting. So, for example, pre-vetting a tenant for free and getting affordability data back, whether they have CCJs, information about whether they've been a good tenant in the past from them at no cost is sensible. Because if you can present multiple tenants to a landlord, or you can look at multiple tenants to consider them, it's quite wise at this time, as opposed to kind of putting all your eggs in one basket and going with one. And then back to the technology versus human point, it is a balance between technology and great people. Open banking and ID verification have changed the referencing market, but they really do work. If they are used, the fraud it is near enough eliminated. So encourage your tenants to go through that process. For you obviously want to save costs by potentially reducing the contact with applicants as they go through the process, to turn to technology, pre-tenancy systems, anything where companies are going to help you. For example, we support the applicant from the very beginning when they're filling in their form, and we make contact with them before the referencing's even started. The reason we do that is if we can help them, it really cuts down the time to get the reference back. But also we start to detect fraud really early on by some of the questions that they're asking us or some of the things that they're saying. So it becomes really useful down the line. And also we check a previous landlord in some scenarios, not just a current. We all know, and we probably had landlords where they've said the right or the wrong thing just to get a tenant out of a property. Actually going back one further and understanding what that previous landlord said would be often more valuable. So in terms of a landlord, how you can help them, I'm a massive advocate of rent and legal protection. I preach it to my team all of the time, but we are really bordering on negligence at the moment if we do not make a landlord aware that it's available to them for so little money. Okay, if we take the rent rises that have happened over the last 2 years, for about 15% of that rent rise, it would cover a rent and legal protection policy. And I'm sure if they knew that 2 years ago, they would have said, yep, I'll take 85% for myself and I'll protect myself. It doesn't cost a lot. It costs about 60p a day. On average, you're protecting about £50 of rent a day. It makes a very viable proposition. Setting up something really simple like a legal mailbox, so legal at your letting agency, so that when you need to kind of step up your arrears chasing or your messaging with tenants can work really well. We use it, we get responses. We also offer a free letter before action service, which again, your providers might do that. But having a solicitor write to your tenant to say, this is about to get serious, let's talk, let's try and find a way. We have about a 40% success rate with it without it escalating, whether it goes to the insurance provider or to obviously, more serious if there is no insurance in place. In terms of tenant support, make sure that they know that you're there and make sure that they can turn to you and talk to you. When a situation for a tenant changes, it doesn't make them bad people. They're still good tenants, they're still good people. Unfortunately, they've had a change in circumstance. It's a long month from when you've made one rent payment to the next. And if you're not making sure that they know that they can talk to you in that time, it can feel like a really long time and their situation can escalate pretty quickly. Deposit replacement solutions, love them or hate them, they're a good option in this type of market. They reduce the spend for a tenant moving in, but they can also free up money with a tenant in situ. So if their disposable income has shrunk and an extra £50 or £100 a month is what a tenant needs, they often can free up £1,000 by getting that deposit back, which will keep that in the bank for anything that happens, and you still have all of the protection that you need. And spend time with your tenant going through their obligations at the outset. Typically, they're signing into a £12,000 or more contract when they're signing in. It's a big deal. In some instances, you would go through lots of declarations and questions. In some businesses, you need to make sure that they know, and offering tenants insurance where you can protect their deposit and protect things if they go wrong. Unfortunately, if you're a tenant and something goes wrong in the property, you have a duty to put it right. If it's your own home, you can choose not to if you financially can't afford to do so. So making sure they understand for something like £12 a month, they can protect a huge amount. I definitely would encourage you to do that. Review your rent arrears process, make sure it's tight, make sure the emails that are going out or the phone calls that are going out have got the right messaging and they're as strong as you want them to be. And keep on top of your own costs, because if you can save some money elsewhere, if something goes wrong, you're okay. So look at your subscription fees. Are you paying them unnecessarily? And actually, if you've got a pay-as-you-go model, if a tenancy comes to market and you've got to buy the references, that's when you want to be paying for the references. You don't want anything that's kind of not working in sync with you. And suppliers like us and everybody out there today, we always have new things. We're always trying to innovate. We're always trying to provide solutions. Talk to your suppliers. They'll probably have new things that may just be interesting to talk about. In a time where the market is tougher, the competition raises their game. What are your competitors going to be saying to your landlords? Okay, they're probably going to be talking about risk, they're probably going to be talking about rent arrears, and they're probably going to be saying some form of protection. If you are not having that conversation, you're missing a trick. They turn to you as a professional service provider, make sure you're there, put a courtesy call in, not when you want something from them, just because you're going to put a call in to see how things are going, and make it hard for them to leave you by offering them a bespoke proposition. This is us. I'm not going to do a plug, but we help about 1,000 people move home every day, and we're trusted by 1,000 people in the UK, and we started out as a referencing business, so it's core to what we do. We feel very passionate about it. And my main kind of final message to all of you is great things are done by a series of small things brought together. So this isn't about changing everything and massive things. It's about making small tweaks, and they make a big difference. And if you can't do great things, do the small things great, and it will make a big difference. So thank you very much. Okay.